Hey, good morning. Thursday, March 26th, 6:37 p.m. a.m. And I'm going to look at some charts here. Before I get on to that, there's been a lot of chatter on CNBC and I showed a picture of the woman in my previous video, yesterday's video. I don't remember her name, but she's on TV this morning talking about how a lot of great quality stocks are on sale, how they're so discounted, how their financials look great, or their fundamentals, or talking about what they're going to look like a year from now. And then she's also using some reverse psychology of talking about when Trump decided he was going to inflict tariffs across the globe on Liberation Day. And they're trying to make they're trying to make it relevant of what's happening now compared to what was happening then, and how people that were fearful of the unknown missed significant runs in the market since the Liberation Day. Now, I do not agree with that whole basis. Yes, there are some great stocks at a discounted rate, at a discounted price. But that doesn't mean they're not going to be further discounted. That doesn't mean because it's down 50% that it's the right time to buy it, because it could go on sale for 75%. Remember, in trading, we need to get away from whether I'm right. Oh, I was right, or oh, I was wrong, or I knew that, or I wish I would have put money on it because I knew that was going to happen. Nobody in the market knows something's going to happen. And when people are cocky and arrogant and say, "Oh, I knew that was going to happen," you might want to shy away from them, because that's just a narcissistic demeanor. But they never tell you when they were wrong, right? But anyway, I want to show you a couple things. And before we do that, let's just look at the Qs. The Qs are down to 582. I'm looking at this 580 to be retested, maybe get down to this 550, 560 area. I don't know, be honest with you. It's just the uncertainty and the developments and what the technicals look like and the holistic picture of the markets. But that's what the Qs look like. So let's go to this Oracle. Now, Oracle is a great company. But let's not talk about what it looks like, the company itself. Let's talk about, in the event that this woman on CNBC is talking about how great companies are discounted, and this is the time to buy because you don't want to miss a price movement like Liberation. So this was at 345.72 at the high, the 52-week high in September. Well, it's been discounted a lot, right? It's down 57%. Does that mean it's a buy? Was it a buy here? Was it a buy here? Is it a buy here? 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 You see what I'm saying? Keep in mind that these people that get on TV, they may or may not be in the trading game. They may be long-term investors who can afford to make big mistakes, who tell you when to buy, when to hold, or I'm cutting this, or I'm adding that. You don't know what these individuals truly have going on. They're just getting on television, reading teleprompters, and they're feeding the airtime because the news has to talk about something. Have you ever noticed when you watch CNBC, if you ever watch the eyeballs of these individuals on television, they're all reading teleprompters, all of them, and you can tell who gets confused when they're reading teleprompters because they'll stutter or mess up words, or it's they'll be rambling with trying to catch up on a teleprompter or whatever the case is, but. You got to stay away from this nonsense of people saying it's on sale, you got to buy it, it's cheap. Where it could be a year from now. Man, we're talking about right this damn now. I don't give a damn about a year from now. I want to know about March 26th. Let's scroll through some others real fast here. And these would be considered good companies, right? 55% down. 55% down, 52% down, 58% down, 69% down, 59, 62, 53. We'll do two more, 50%, 58%, and A-Lab is the last one. 54%. Now all these are 50% or more down. Right? It's easy to say, oh, get in the market, get in the market, get in the market. Remember, as traders, it's all about timing in the markets. I'm not going to buy a position right here and say, oh, it's on the cheap. It's going to be great a year from now. Well, look where it is now. It's at 120. What if I bought it at 200? All right, let's look at the ETFs real quick. So we already talked about the QQQ, and this is down almost 8%. And I believe it's got some further breakdown. Again, we don't need to try and predict where it's going to go and be fortune tellers. We can just look at the charts and get an idea of potential probabilities, right? And when the markets do change, if there is a significant change in the markets, then we identify that. And we adjust accordingly based on what the market is telling us, whether it's short-term shift or long-term shift. Because stocks can just stay in free fall for quite some time. There's no rule that says it needs to reverse just because it hit 50% down or 60 or 70% down. There's a lot of uncertainty. Remember, the markets hate uncertainty. Let's check out the SMH. It's down to 392. So it's right at the 10-period moving average. Now, remember I was saying in the video yesterday, and I've been talking about this in the past videos, but I really honed in on it yesterday. Now, sorry for the sniffles. I got some kind of allergy this morning. If we break below these moving averages, we could come down and retest this 374. Now, the SMH has been holding up well compared to its colleagues, right? The SPY, the QQQ, other ETFs, other sectors. If this starts to roll over, it's going to put significant pressure on the high beta stocks. And more importantly, it's going to further impact the semiconductors and the high beta stocks. So this is one to watch. Now SPY it continues to look nasty and rough. 651, we're breaking down. So we're probably going to retest this 645. And yeah. Well below the 200-day average. If we break below this, I'll be looking for a 620. if we have that further expansion to the downside. And you can see as far as the upside goes, you need to work on these moving averages. You need to work on structure. And we just don't have any positive structure. XLF, this one's super important. I've been saying it over and over and over on the videos. And it's breaking down below its 10-period average, so I'd be looking to see if we touch this 48 area again. If we break through, maybe we'll fill this gap at 47. And, see if we get down to this 45 area. Further expansion, breakdown, if the markets allow it. Oil continues to move higher. This is Brent crude oil, $106 a barrel. And it looks like it may want to get back up to retest this 119 high. This is in a bullish phase. The RSI looks good. Everything looks good for this thing to continue higher, which is not good for overall markets, not good for the economy, not good for production, just not good at all. I mean, you saw the numbers that just recently came out for the economic data of the our imports. Our imports are through the roof. This is not good. And remember, when oil prices go up like this, you usually takes about 1 to 2 weeks for those prices to really impact prices at the pump. The industrials. Now, this one always gets touted in the markets. The Dow Jones. Oh, the Dow did this, the Dow did that. Keep in mind that there's 30 stocks in the Dow Jones. So just keep that in mind. That one always gets touted. And sometimes the Qs, the S&P 500 and the NASDAQ don't get quoted as much as the Dow. But just keep in mind there's only 30 stocks in this one. And they are heavy ones. But the Dow is not the entire market. And again, we're breaking below this 200-day moving average, breaking below this 10-period. For the next test, look for this 4,600 to see if that breaks or holds, and then maybe retesting the lows down here at 45,453. 10-year Treasury looks like it wants to break out. It's looking fantastic. That's not good for the economy. It's not good for people trying to get loans. It's not good for mortgages. This represents the economy here. So you do not want this to keep going up, and this nonsense of the Republican Party talking about they want to lower interest rates, that is diabolical. The last thing you want to do is cut interest rates with inflation increasing, unemployment increasing. This catastrophic misalignment of this war with Iran, which we probably shouldn't be in the first place. And who knows when the hell we'll be able to get out. We all know that all conflicts in the Middle East last for eternity. And we may have just gotten ourselves into one. So the last thing you want to do is cut the interest rates with all these things going on. If nothing, there's probably going to be 2 or 3 interest rate hikes. So keep that in mind. This is going to hurt borrowing. I don't know if I'm surprised or not to see gold down. I would expect it to be more upward. But that's where we are. The 2-year Treasury is down, kind of expected. This is the S&P 500 futures. Look for this to continue breaking down to the 65.70 area, potentially retesting the 64.83. The NASDAQ Futures 100. This is, again, weak Be looking forward to potentially retest the 23,000 area. 772. We'll see how that goes. Does that mean it's going to make it today down there to retest? Honestly, I don't know. It could. The VIX is holding steady. This is the futures VIX. It looks like it may want to potentially retest these highs up here. So we'll see. Speaking of the highs, I do want to look at something though. Now, if I'm not mistaken, this was Liberation Day back here. And you can see we got all the way up to 44. So we were up in the high 30s and 40s on significant panic. And we're just not seeing that type of panic yet in the markets, which is another reason why I think we have more expansion to the downside to come, because we haven't experienced enough pain yet. So keep an eye on the VIX. You know, look at these movements and compare these movements on what was happening on the charts and what was happening economically. You know, we got our little rush here, but I really feel like there's going to be some upward expansion to the upside on the VIX. So, you know, keep that on the back burner. Bitcoin, not doing much of anything. Still below all the averages, still below the 50 to 200. There's a lot of people that came out on CNBC touting Bitcoin, how it's going to be the new currency because of the oil and all that. I don't see that happening. If this rolls over, look for this to retest that 6,500 and maybe retest the 6,000. Again, if nothing changes, if expansion continues to the downside and there's no improvement in the uncertainty. This is the last chart we'll look at, and this is the 30-year bonds. Bonds are down. Bonds are telling us a story. So is the 10-year treasury. So is the oil. So we'll see what happens. It's going to be an interesting day today as well as tomorrow, and to really see if Iran, Tehran push this administration to go all out war. I can't see that being a positive thing. I honestly can't see this thing working itself out. It may come down to the point where one needs to be annihilated. But what does that really mean, right? Because you can always have somebody else or another group rise up in Iran and do the same thing, if not worse, than what's happening now. But we just focus on the charts. Let the noise be the noise, and let the charts direct you in either direction. All right, so that's my morning spiel. Good luck trading today. Like I said, my whole thing is watching these cues here, and if I go to like 15 minutes and I turn on the extended hours, you know, you can kind of see. Let's go back one day. You can kind of see where we are as far as like the breakdown. And this is what I'm watching. I'm watching to see what we do here and see if we start breaking down towards this 580, 578 area. But I like what I see because I'm short the market, but we'll see what happens. All right. Please like, subscribe, share, comment. Let me know what you think. And good trading to you. Take care.